Yo, what's up, everyone? It's your favorite mentor, your one and only Forex hero. I go by the name of Ofentse Ledwaba, as you guys know me. And today I'll be giving you guys much more knowledge about understanding what is an order block and how to identify an order block in Forex trading. So, I'd like you guys to please do me a favor, click the like, guys. Let's get this video to 500 likes and 1000 likes and so forth and so forth. Keep on sharing with your friends and families as I make this channel for you guys who are not able to afford, as beginners, to be able to afford the forex classes. But this is just the basics, and also you can apply it and be able to trade. So please click the like, subscribe, and notification bell so that you're notified every time I drop a new video. So let's go and learn more. Okay, guys, now I'm here on the Forex order block. I'd like to give you guys a brief definition so that you can be able to understand what is the meaning of an order block. Order block is considered a market behavior that indicates the pile up of orders from banks and institutions. As we all know, the market is driven by the giant institutions. So you have to understand that the move that happened, us as retail traders, we don't have enough liquidity to push the market into direction we want it to move, or we can turn it. Order block is a market move that indicates the pile of orders. Understand this: pile of orders simply means there is a lot of orders that banks have put in place at that specific area. The central banks and financial institutions mainly drive the forex market. This explains it as it is, which is true. Hence, traders should know what they are supposed to do. The market starts ranging while building the order block. You must always remember that before an order block is some sort of a build-up phase where the banks and institutions leave their orders, whether it's a buy or it's a sell. Investing doesn't take place at that time. The market tends to make a sharp move on either side once the order block is completed. So once the order block is complete, the market will either make a move to the upside or to the downside, depending on where the order block is placed. The key behind order blocks is that it includes what giant institutions are doing. So by you understanding what is an order block and be able to apply it in the forex market, you are able to see what the big institutions are tending to take the market, where price has mostly likely to go. What is the order block in forex? Order blocks are special kind of supply zones and demand. So understand what it simply means that an order block is in forex trading. You always have an order block where you're having a supply or a demand. Always remember, the demand is at the bottom and the supply is at the top. So that's why they bear such a name. It comes into place due to buying and selling of the banks. If you are already familiar with order flow trading, then you might have heard of order blocks as well. Banks use special orders for buying, selling, taking profit, and closing orders. Check that. Banks use special orders for buying, selling, taking profit, and closing the orders. So sometimes the market leaves entries and come back to come and fetch them too, and that we look at it as a market manipulation, or such as a retest. If we look at it closely, sometimes the market tends to push a little bit further down, so they are fetching those orders. When banks want to open a position with volume, they not randomly place a position to upset the price and trigger their order at the worst price. That means that they're covering their profit. So you must always remember, if the banks has an order that is in loss, they will come back to fetch it so that it comes into profit. So by you understanding those certain motives, you'll be able to understand where you're supposed to buy and where you're supposed to sell. So we follow the market, we trade with the banks. Okay, now we are on the charts. Then I'm looking at identifying the order block. So I like to assist you guys in understanding and also looking at the order block. So One thing I like us to look at is identifying the order block where on a daily time frame. That way it becomes easier for you guys to practice and be able to understand and see it with the naked eye. So let's go to daily time frame. On daily time frame is much easier to identify it. So can you see where we are having here? In most cases, you can see we will have multiple confirmations. 1, 2, 3. So a strength change, a break of the structure would mean that the market will retest and push to the upside. But I see 1, 2, 3. This is the third chance I'm taking the market to come to the downside. Because you must always remember that 1, 2, 3. Third touch is the most significant one that can be able to see that the market has a chance of pushing to the downside. But now let's look at the order blocks. Yes, an order block, as I've explained, an order block, you will see the last candle before an impulsive move. So can you see this impulsive move pushing to the upside, and you're having this last bearish candle? And zoom in so that you can be able to see this last bearish candle. So this, I'll identify it as my order block. I'll just write OB order block. Let me just, and this will be my order block. Okay, and then what do I see? The market pushed up and then it came to retest. That's where we enter now. That's where you can use the order block to enter. Because why? You can see that the market pushed and it came back to retest. So this is a retest. And you have your stop loss below this order block. So this, we get it as a what? It's a retest. This area here. Once it retested, the push to the upside, retest, we are in. Then it goes further up to the upside. Okay, so now you've seen that you can be able to trade using the order blocks and also put your price action into place for you to be able to get it much quicker. So looking at what we are currently seeing, we also see some certain moves that we are having a bigger rejection here, which is some sort of an order block here. So can you see what is really happening here? We are having a greater rejection around this level. The market is failing to break above. You can see this rejection candle. So this will be what our supply zone. As you can see, the market supply to the downside, supply to the downside. You expect the market to supply. Failure to that, you can simply say that the market will eventually push to that upside, meaning this supply zone will eventually fail. But always remember that the order blocks, we can be able to identify them as well on lower time frame, which makes it easier for you to have a small stop loss and also identify them with ease. Let's go to 4-hour time frame. So I see the market giving us a rejection here. So you have to understand placing your your stop loss in the right place, because I see here we had a sell position, we're still having it's still running. You can see the certain rejections. So understand the method of placing this tab is because of this order block. Order block that I got on H1. Let me show you. This one I got it from H1. This candle here, I just write OB, and then what is this? It's a retest. The market came back to fetch their orders. So they pushed down from here, and then now they left their orders here and come back to fetch them. So it's not exactly where you see their orders, but this gives us an indication that the market left some orders, and you look at it as a retest. Then I look at the market pushing to the what? To the downside. So I have no reason to buy here. If the market reaches my stop loss, then I'm out of this trade. I'll try again with another setup. So this is what I'm looking for. So I can see that we're having a certain rejection. So I'll put my TP just here before this rejection. Why? The market tends to push reverse here and push to the upside. So you have to be aware of those certain traps, because you can see the market closed here, they pushed further down and then they closed here. So the orders are at most here at the bottom. But when you draw your order block, make sure you include everything. So here, the order block that you can have will be, let's see, you see this bigger one. So around this area, the market can reach and push to the upside. So let's look and identify other blocks. I want to show you something. Look at the rejection candles happening here. Can you see no candle closed above this? So all of them were below this order block. All of them. Yes, the wicks are above, but the body, the close of the candle is within this area. Hence, you can see what the market did: push down, came back to the order block, boom. And you see what it did. It was just showing you signs that yes, indeed, I am pushing to the downside. Move the stop loss here, put it here. So always make sure it's above these wicks. You see, above these wicks. So this will be the highest wick. Put it above there, because you cannot put it here. Even though you put it here, but it's standard risk. So make sure you put it here, because there's market manipulation in the market. So I'm happy to be sharing this with you. I'm glad you took notes and stayed up until the end of the video. I'd like to urge you guys to make sure we reach 1,000 likes, and also let's push this channel, share it with your friends and family. From me, Ofentse Ledwaba, your favorite mentor, the one and only Forex Hero. Catch me in the next video. Don't forget to like, subscribe.